Now we are on 2.2.3, the trade and other payables. Okay, the trade and other payables. I've already prepared a template for you so that it can become faster and easy. Remember what I said initially when we were looking at the trade and other receivables. Do not forget to consider the other calculations that we have done in the other videos, the previous videos. We are taking some of the information from there and of course putting it wherever it is required in our trade and other payables account. The first thing that I've recorded is the creditors control. We look in the pre-adjustment trial balance. We've got creditors control is 229,120. 229,120. That is our creditors control. Adjustment number A, it also affects our creditors control because they say the company consistently applies a markup of 60% on cost. These goods were returned to the supplier. Suppliers are creditors. So the customers returned these goods, the defective goods, to the business, and the business also returned them to the supplier where they had bought that stock. So the suppliers are our creditors. So it means whatever that was being owed to the creditors is also supposed to decrease by the cost price. So if you look again at that adjustment, you will see that under cost of sales, we had an adjustment of 1,410. 1,410. Because of that adjustment, our cost of sales were reduced by 1,410. So you must not forget to look at that video. Okay, so now we have got 200 and let's see how much our total is going to be now. It becomes 227,710. 227,710. That is the creditors control. And then we also have got creditors for salaries. We have got creditors for salaries. I'm sure here, creditors for salaries. Where are the creditors for salaries? Let me see. Creditors for salaries. Creditors for salaries. Okay, they are on the adjustment. Adjustment number E. The creditors for salaries figure 25,100 in the pre-adjustment trial balance. In the pre-adjustment trial balance, okay, the creditors for salaries, they are here, okay, 25,100, okay. So I will indicate 25,100 for the creditors for salaries. And then there is this adjustment number E. We already looked at adjustment number E. You go back to it. In the adjustment trial, reflected the following two situations. Remember with this scenario, is it? So we are also supposed to remove the creditors for salaries that are found in this 28,000. Okay, so what do we do? Of course, remember, when this is a gross salary, we subtract the payee, we subtract the UIF. The amount that remains is the one that we are supposed to record in our creditors for salaries. So after minusing 7,852 and 148 from 28,000, we remain with 20,000. So you say minus 20,000. So we remain with something like 5,100 as creditors for salaries. I hope you have understood me. You look at the gross salary, you remove the payee and the UIF contribution deductions, and then you find out that you remain with this 20,000 that I have recorded here. And when you subtract 20,000 from 25,100, you remain with 5,100. Let's look at SARS payee. The SARS payee that is already given here is 12,050. 12,050. Okay, 12,050. Let's check to see if there is any other adjustment that we are supposed to take care of that is affecting our SARS payee. Okay, the SARS payee, if you look at the deductions, there is payee here, is it? Remember, this man was not needed, so we are also supposed to subtract it. Minus 7,852. How much do we remain with after our calculation? We'll remain with 4,198. 4,198 is our SARS payee. Okay, we also have got the UIF. The UIF, of course, we are given UIF here, Unemployment Insurance Fund. Okay, let's also open a bracket for it. It was 979. But remember, we are cancelling this one out. So we are going to minus the contribution by the employee, the 148, and also the contribution by the employer, the deduction from the employee and the contribution by the employer, 148. We remove all those UIFs so that we see how much are we supposed to remain with. We remain with 683. 683 is our UIF. Okay. On bank, we also have a bank overdraft. How do we identify a bank overdraft on the pre-adjustment trial balance? Because I know some of you might be looking at where it is written bank overdraft. You look at the bank amount. Whenever the bank amount is appearing on the credit side, it means it is an overdraft. So here we are having an overdraft of 32,740. 32,740, 32,740. Okay. That is the bank overdraft that is there. But there is something that affected our bank. If you still remember the other adjustment that we looked at, it was adjustment number G, the one that talks about the G, the one that is looking at the assets, the asset disposal. Remember this error that was done. Okay, the bookkeeper recorded the receipt of cash in the CRJ and asset disposal account as 14,000 instead of 24,000. So there was a 10,000 short. So we are going to add that 10,000. Is it? We are going to add that 10,000. So a plus 10,000 decreases our overdraft. Remember, a bank overdraft is a negative amount. So that 10,000 is going to reduce our bank overdraft. So we say minus 10,000. This is a positive amount, okay, which was where the bookkeeper had made a mistake. So in other words, now we remain with 22,740. 22,740. Okay. Please remember to go back to those adjustments that I am actually explaining now so that you can get a full understanding of exactly what is happening. Deferred income, that is income received in advance. Where did we have income received in advance? Let's look at our question. The income received in advance, we found it on rent income. Our rent income, if you still remember our rent income under other operating income, we had an adjustment that we looked at there. Okay, fine. How much was it? Do we already have anything here? No, there is nothing. There is no adjustment, of course, that we are also going to write. We are simply going to take that amount. It was, so let me just indicate here, rent income for reference. Okay, so it was 11,101. You go back to that adjustment, you see that income that was received in advance. Okay, we also had accrued expenses, and our accrued expenses, we find them on audit fees. Let's look at the audit fees. Audit fees, it was adjustment number, the adjustment for the audit fees, let's see, it was adjustment number C. Number C. Remember the 60%, is it? Which was accrued, is it? When we calculated the 60%, you go back again to that adjustment. The amount was 37,500. 37,500. And then the current portion of the loan. How do you get the current portion of the loan? We go back again to the adjustment number I. Remember, we had to calculate the interest. And remember what they said here. They say that, okay, on the agreement that they would pay back a fixed amount of the loan each year as well as the interest expense for that year. Okay, they are paying a fixed, they would pay back a fixed amount which is together with the interest. So the repayment is also including the what? The interest. They've even said it here. Repayments including interest during the year. Now we calculated the interest here. Okay, so in order for us to only get the repayment or the current portion of the loan, we have to remove the interest and we will remain with the current portion of the loan. So if we take the 166,200 minus the interest, remember you go back to where we did the adjustment number I, the interest was 46,200. So when we subtract it, we are going to remain with 120,000. This is the current portion of the loan. Okay. And then SARS income tax, we are simply going to record the money which was due at the end. I think it was on adjustment number K. On completion of the audit for the year, it was calculated that Happy Limited owed SARS. The money that was owed to SARS is what is going to make up our trade and other payables. It was 11,450. So we record 11,450 here. Okay, for SARS income tax. Lastly, we've got the shareholders for dividends. The shareholders for dividends, we also did a calculation on, it was on L. On L, okay, at the end of, if you look at J and L, they will help you to understand how we did the calculation for the dividends. How many shares did we have at the end of the year? If you remember, there were 465,000 shares, of which they said the shares that were being given to the directors were not supposed to receive any dividend, is it? Okay, they're saying that, okay, the directors declared a final dividend of 80 cents per share. The shares issued to director Z Mvulu do not qualify. So remember, how many shares were given? 2,500. We're supposed to minus 2,500 and we multiply by 0.8 or 80 cents. And remember, we got something like 370,000. When you have done all this, you are home and dry, everything is done, you get your 21 marks. The final answer, the total was not actually required, but if you want to find out how much was the money which was supposed to be taken to the trade and other payables in the balance sheet or in the notes to the financial statements, you simply have to add everything that is here. Okay, I'll repeat again. For the trade and other receivables, the trade and other payables, even the ordinary share capital, please refer again to all those other adjustments that I've already shown you in the previous videos, so that you can actually be able to get a full understanding. So finally, we've come to the end of this question number 2 from the accounting paper 1, September 2020, Northwest Province. These are all the calculations that you are supposed to do when you are looking at question number 2, which deals with the income statement and the notes to the financial statements. Do not forget to go to the comment section and leave a comment there. Maybe you are asking a question or there's anything that you want to say pertaining what we have been doing on this particular question. Thank you so much. Do not forget to like the video. Do not forget to view the video. Make sure that you get a full understanding as you look at all these adjustments. Already remember what I said initially. I know you already know the formats and everything. That is the reason why I'm only dealing with the calculations. Thank you so much.